It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. I fill in. I come in the third hour of Monday, Wednesday, Friday sessions. I start off with Steve Rhodes. Steve's got a Master Trader course coming up in the Orlando area. I believe it's this weekend, in fact, starting Friday. And, this is fascinating because, let me just show you a chart. I saw Steve showing this particular chart, if I can get it. Let me get it right there. Now, this is my 120-minute chart of, if you're looking at Tiger TV, this is my 120-minute chart, and it shows you a lot of information. Now, I'm going to make it real squashed. You will see a large arch formation. You won't be able to make out all the details because it's so squashed, but I'm showing you the major trends. Now, you know how we always hear that down modes are much sharper than and quicker than up modes? I always disagree. I say that only in a crash type chart. And what I mean by a crash type chart is when you have that vertical plunge that you suddenly had intraday yesterday. Well, this one right there, and I'll get to it a little later. But look, there was one on the upside right there in the E-minis. I'm showing the E-mini S&P 500 June contract. So what's really important is that when you are looking at chart formations, make sure that you clear your head and you don't have a prefixed kind of image or pattern in your mind that says something has to happen. Nothing in the stock market has to happen. There's no inevitability about anything. You can always find something that's going to change. Now, the reason why I wanted to bring this chart, it's not even the way I was going to start the show, but I'm bringing it up because of what Steve showed earlier on. He's going to teach you techniques, just like I teach techniques. Now, look at this. I'm going to expand this chart, and one thing before I do, I'm going to show you that there was a left side, right side price time match that just missed yesterday, going to on the 8th. Was that on the 8th at 4:30? In the afternoon, going down to 1372, just mismatching it. But there was a declining trend line that said that is the major support. Now look what's happened. The 1332.75 low of the 6th of March will become a target to the downside if certain factors fall in place. And one of the things that I wanted to discuss is I'm going to expand this chart. I do not like messy charts, so let me make this as clean as possible. Where we're at now is a very long declining wedge formation, which I drew this morning for my subscribers. Get this chart every single day, just like they get this chart here, the Dow chart, this one right here, with an extremely detailed explanation of the ChapmanWave, what we were looking at. Remember last week we had a caller from Boston, and I was discussing the ChapmanWave flat base restart particular technique that I discovered and actually created many years ago. Which tells you that if certain characteristics happen, you will be coming back to that starting point of here. In case you want to see what it is, 12,743, the low of the 10th, was it the 10th of February, even though it just undercut it by a fraction at 12,734. And look what happened yesterday. Blap. Well, in the ChapmanWave arch formation, just like the dreaded H formation, in that arch formation says, if you close below the left side low bar, in this case 12,734, and yesterday we went down to 12,710, there's a really good chance, and this is what I said to subscribers, be ready for a bounce, because why? That bounce can take you, can be immediate, and it can take you into the body of this candle. Now look what else I had. In my ChapmanWave Trin gauge, this is my own, this is Richard Arm's Trin index, I use it as a trend gauge with my own numbers. That's basically, I use his technique, but I have my own secret formula. And what I did within that, there was a cluster formation with very high trend readings the past 3 days, actually 2 days, and today actually had another one. And that went from 251 to 2.42 to 2.37 today. And invariably, this particular technique works within 1 to 2 days. Unlike my trend gauge low signal, which works the very next morning, this one can take 1 or 2 days, and says be careful to coincide with your analysis of the ChapmanWave arch formation with the ChapmanWave flat base restart. You can bounce up. Now here's another thing. We made a peak E at the close yesterday in the very short-term VIX index at 19.50. You think I'm not going to get back to the chart that I was talking about with Steve, that Steve was showing in the emails? Absolutely I will. But I wanted to show this, why I was expecting a bounce today and why it's a bounce that I do not want to play on the long side. In fact, I wanted to play on the short side. And so the reason why is because we've had a sell signal from last week in the 200% short the Dow via the DXT, and we included the QID yesterday as a 200% short the QID. Why? I'll explain that all, but first I want to go back to this chart. I'm making it as clear as I can. Look at this. Clear, clear, clear. Aha! Now you can see that support level yesterday of 1371.75, which was broken, should then become resistance. Where did we go to today? 1370.50, just over $1 below that level. And now comes a very interesting thing. Why? Because the stochastic's even worse in the rally attempt late yesterday, and the stochastic's only at 52%. And the MACD is rallying and the Instagram's running, but you're not really getting big price appreciation. I am very cautious right now. Now, this is the chart that Steve showed. Now, first of all, let's go back to my chart, which said we went to a trough D, had a doji candle, stochastic was turning up, MACD was turning up. The 10-minute chart showed a very nice pattern, and that pattern was just rise, very steady rise from the low of 1442.40 yesterday afternoon. Correct? Was that yesterday or last time? Whatever it was, 1440. And then it started up, yes, yesterday, just before the close. And then it had a steady move to the upside where? To the 200-period exponential moving average, made another peak D. That peak D says be careful because you made a V-shaped inverted V-shaped pattern in the stochastic. Ha! Now we get to Steve's chart. Steve had shown, and I didn't quite hear everything he discussed. I just saw the chart because I was busy trading and doing some other things at the same time. He showed the Gartney pattern. And look what happened. From the low of the 6th of March, you ran up. You went where? In the ChapmanWave technique. Remember, let me squash this chart again so you can get the relationship. Whoops, it's going to be difficult. Okay, you went to 1418.17. That was a peak D high, and the stochastic and MACD gave a sell signal, and that was exactly coinciding with the top of the first trend line for Steve. Then you come down where, for me, it was most important that we were on the 200-period exponential moving average. I kept that in this chart. That's that blue line. You made that conclusion of the upside wing of the Gartney, or it might be butterfly, and then you went up. Where did you go to? Another ABCDE at 1417.25. That was my work. For Steve, it's the upside V-shaped pattern that you want to get, that inflection point that makes the V for the upside or the downside to start the right formation of the wing of the Gartney or butterfly. And what does it come down to? You went to an arch formation, you broke under 1388 support, 1386 support, went crashing down, you went to a trough D, and you got a little bit of a buy signal, and that coincided exactly with what he was looking at. And he had a 0.786 trend line. I am working on getting that a percentage trend line into TradeStation. I hope to have it in a couple of weeks. So how about that? You try to put techniques together, and that's what Steve is going to teach you in his Master Trader series. And I was asked if I would do another Master Trader series. I love doing them. In fact, I miss them so much. I love teaching. I love going through these. I love going through it live so that you can see it. And I will plan on doing something. It's a real busy schedule, and I'm trying to do some other things at the same time, trying to put together different things. So I absolutely will try my very best to do it. So now let's go back to what I was looking at. The volatility index went to peak E in the 120-minute chart. But wait a minute. It also went to, in the daily chart, it went to a peak E. Isn't that unusual? So it went from 13.66 to 21.06 yesterday. Now that coincides, 21.06, that coincides with the peak E in the 120-minute and the daily, but it also makes 84% the level in the volatility index. And as you remember, I had a call. Who was it? I had a call last, was it earlier this week? Was it on Monday? I can't remember, Thursday, Wednesday, from Ernie. And that asking at the end of the show on Monday, and I spoke about the volatility index, and I said, the way the volatility index is acting right now, it appears to me that it is in a rising formation based on both the weekly chart and the monthly chart, and that Eiffel Tower pullback from 14.27 to 13.66 completes that V-shaped, inverted V-shaped formation. And now what we've seen is that every time that the volatility index in the monthly has gone to the 15s or 14s, now it's going to the 13, you've got some kind of a bounce coming out of it. Together with everything else I'm looking at now, let me do this. 877-927-6648. There's not going to be that much to talk about today. I mean, I'm in a sell mode in the daily Dow, the daily S&P, and the Qs have just done that. Now let's go to this. We'll go one at a time. INDU, the Dow Industrial Index weekly chart is making a peak B from the 13,297 high of last week. The MACD is turning down. I've got to wait until Friday afternoon to see if it actually closes the fast-moving average, the yellow line. If you're looking at Tiger, let me just make this a little clearer. If you're looking at Tiger TV, what's very important right now is that you are aware of the way that the fast-moving average and the slow-moving average, the red line, yellow line, fast-moving average. And you remember I spoke about this potential squash way back in November. I said there's something going on here in a technique that I use that's called the squash that can take you to very sharply to a leg C, and then you might or might not have trouble getting a D, and the D might just make a nominal new high. So now look what's happened. The stochastic is still good at 84%, but it's turning down. The unbalanced volume is turning down. The MACD, moving average convergence divergence, is just about across negative. I'm going to wait until Friday afternoon to see if it does. The 20-period exponential moving average in the weekly has supported 12,696. We've gone down to 12,716. So I am somewhat cautious here, and we will talk about this more as we get back. 877-927-6648. I will even show the Apple chart as we're going out, and you'll see exactly what I'm looking at in that 120-minute chart.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 97. Oh, I didn't even give the numbers. Dow's up 97 at 12,813. S&P is up 12 at 1371. Comp Index is up 33 at 3,024. Gold is up 70 cents at 1661. Yeah, I just don't see anything in gold. Silver right now is down 13 cents to 31.54. A high-grade copper is up 35 at 365. It's been hammered down. It's not so good. Crude oil up 92 cents at 101.94, and bonds are down 19.30 seconds at 142 and 26.30 seconds after a fabulous day yesterday. Now, I had one question in the den. Would I look at AMRN for Art in New Hampshire? That is Amarin Core PLC. This is a stock that once traded at $14.50. No. That's not $14.50. That's $1,450. And it did drop a little. It dropped, let's see, the 1450 was back in 2000 and 1994. 1425. Oh, I'm sorry. Back in July of 1993. So it had a little bit of a pullback. It dropped from $14.25 to $5. And now it is having a rally that started at $6 in the weekly at $5.99. Actually, I should have put $5.99. The week of December the 16th of last year. I'm using this as a phantom peak. In fact, this is going to go in my notebook on all these different techniques. Reason why I'm calling it a phantom peak, even though this might be peak C, A, B, C, D in the weekly chart with the last one high of 12.45, week of the 23rd of March. It's because I had an on-balance volume pullback, and it was trading so low at $7.65. A penny doesn't make that much of a difference if you get the technique that goes with it to say that theoretically it should have pulled back 1 penny. And the way that the stochastic and the MACD are acting, it's prudent. I like to be on the conservative side, so I'm calling this peak D instead of a peak C, which says you don't have to now wait for peak D. Other things need to happen. In the daily chart, that spike up must have been news-related. I'm absolutely 100% sure. This is news-related spike starting on the 14th of March from the low of 701. It just zoomed in 1, 2, 3, 4, 5, 6 sessions, 5, 6 sessions to 1245. The high of the 21st. And now it's used all this time to come back. And that says to me that it was news-related, and now it's going back to the norm, to its usual, well, the price that it should have been at. And that price is right on the 200-period moving average at 9.19. Now, I don't know if you've got, if you're in this or what the question is. I'll do it as if I have no idea. If the question was, should I buy it here? I would say it depends on what that news relationship is. This is Amarin Core PLC. For the life of me, I know the name so well, I just can't remember what it is. Where is my, that's on a different page. Where is my, oh, it's down at the bottom now. This is a funny story, but I haven't got time to tell it. Okay, let me just get back here. Amarin, A-M-A-R-I-N, Core, and it is at, let's see, Amarin Core, yep, that's the one. Biopharmaceutical company. Okay, yeah, absolutely, this is news. Now, I'm going to make a suggestion, and it's because of the way the weekly acted, the way the daily is acted, and the way the monthly is trying to hold, even though the technicals are quite poor. I'm going to say that if you want, as an this is look at your portfolio. If you can afford, if you have it already, I would say I would make a stop 8.85. At least some of the money should come off if it closes under 8.85. It's at 9.64 right now, up 30 cents. The way it held yesterday and the way it's acting today tells me that there's a chance that it could try to rally to the 1023 9-period exponential moving average. Here's my recommendation. If you've got a portfolio that you you're in at 882, oh, well, then that's the answer. What I was going to say, I would nibble at it right here. The reason being, if it can hold the low of 930, but preferably 919, is the 200-period exponential moving average. You see, if it closes decisively under 919, that becomes a barrier. But if it can wiggle around here, but not close under that 919 level, but instead, if you're holding it here, if it can get to, if yesterday started off as a decent candle with a high of 1016, that 1016 should be right there. It should try to go for it, and 1023 is the 9-period exponential moving average. So I'm going to do this. Biotech with FDA approval. All right, good. In July. Possible approval coming up in July, I suspect. Okay, if that's the case, this is my recommendation. You've got it here. I would make a fairly tight stop. If you're in at 882, I would say 870 to 866 should be your stop. If it starts to break above 1035, I would actually wait for a little pullback to add another small position, and that one has a much tighter stop. I'll be right back, and we're going to be talking about GPK.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. Dow's up 99, S&P's up 12.86. Now, I had a question from one of our Tigers if I would do an analysis on GPK. Now, GPK, Graphic Packaging Holding Company, is a stock that I had at some point done some work on, but I just finished up the chart a short while ago. This is a very interesting chart. This is a Graphic Packaging Holding Company trading at $5.29. The monthly chart shows just made a V-shaped top, and there's a doji at a peak E at 587, and the last rally after the little V-shaped bottom and comeback went to 576. The MACD is lower now at 74%, and the stochastic's just barely positive. Now, what's interesting, I'm going to squash this chart, and you'll see how fascinating it is. This is a stock that was once at 31.38 back in August of 1995. But what I love to do is, it doesn't matter what time frame I'm looking at, I love to just grab the chart and say, wow, what strikes me immediately is that it's in a trading formation, a rectangle trading formation. Then I can just expand that, and I've already got that blue outline. And I was asked a question that I deal with all the time. I would love if my charts were white and you could just print them out. It would be very nice because black uses up a lot of ink. But I just see visually, I've done it for so long, I see with a black background, they just pop right out, the peaks and troughs. I find with a white background, I might miss I might miss a peak, and that's really not very good. It's great for printing, but it ain't great for my seeing. So now this is the issue, that the weekly chart, and here again I've used a phantom peak from the low right at the simple moving average, the 200-period moving average low of the week of the 7th of October. It hit 3.05, had a fabulous move up over the 9-period exponential moving average, that white line, way over the 200-period exponential moving average. It went to 470, pulled back, and then had another little peak A. I call that a gray A. And then you get the parallel move above 470, that at 471 it starts leg B, and it goes to B, and that B is at 524. Then, and this is very unusual, the ones that I'm pointing to today, talking about, are extremely unusual, and I use it judiciously. I used another phantom peak on the 24th, the week of the 24th of February at 551, and the week of the 2nd of March at 551. And the reason is here as well. I had the unbalanced volume gave me a hint that said, you know what, you can take that as a peak because you've got A, B, C, D, just matching exactly what you've got in the chart pattern. Now, this was a look back. If I was doing it in live, I would say, you know, maybe it is, maybe it isn't. But now the look back says that the stochastic has dipped strongly to 82% since it made what I call leg D and then a peak D at 576 on the 16th, the week of the 16th of March. Now, what's important is that I want to be a tad early. It just says to me, here's a heads up. If it closes this week underneath the 9-period exponential moving average and the fast moving average, the yellow line of the MACD breaks underneath the slow moving average, that'll be a heads up to say, be careful because it could be pulling back. But if the pullback is mild and it holds $5.10, the 20-period exponential moving average, this dashed line, all of this week into next week, that would be really, that'll be very good action to say there's a good chance that the pattern that followed where it made a V-shaped formation back in the monthly chart is the characteristic of this particular packaging holding company, and it's going to retest at least the high bar of 567 the week of the 6th of April. If it plunges and it breaks and closes decisively under 510, it says that I was correct in calling that a peak D. If there's a new high, I will just move everything over to the new high, if that's going to be leg D, and then I don't use the phantom. But the phantom gives me a heads up to say, hey, if you miss this, you'd be waiting for a peak C, and it's the wrong thing to do. Now let's look at the daily. So that means on a longer-term basis, and that was the question, what would you do with a longer-term basis? On a short-term basis, let's just say you had a position and you got out of it. Now you've got maybe, say, 2 positions because you've had it for a long time. I think this person's had them for a while. Then what I would do is the second position would have a stop underneath $5, a close under 510. Now, it could be wrong, but it's saving you a lot of money because if it closes below 510, 495 will be the 9-period moving average in the monthly chart. Sounds like nothing, but it's a big percentage. And you can always get back in. Now my big question is in the daily chart. Look at this. You've got the pattern that I call a flat base restart, although it's the pattern, but it isn't exactly one. Actually, I could even turn it into one by putting it down there. I don't want to do that right now, but it really has the look of it, which says you go to higher highs, but on the way, you keep coming back to a major critical support level. You're not going straight up with higher highs and higher lows. It's higher highs and wiggly, jagged lows. That really is the definition of a flat-based restart. Preferably not breaking the most important low. In this case, it would be the peak A low of $4.88. Now, what you've done is you've gapped down over the last few days. You're trying to fill the gap. The stochastic is at a point. It's flattening at 19%. The V-shaped turnaround is great, but it's not doing it. And the MACD says there's still room to the downside. Here's what I'd be looking at. If some part of, say, a third position, a long-term position, if that long-term position is really a buy and hold, that has to hold $4.81 going into, for the whole of April. If perchance it's able, and it's kind of pulled back with the market, not bad, but it's pulled back with the market. If it is able to do that, I will go back to the weekly and say, good, there's going to be a retest of the higher highs, that is back at 567 to 576. Now, the monthly chart says if you can hold onto a position by hook or by crook, somehow or other, without being taken out. In fact, I'd even say to you, a core position could have a stop even lower than that. You could make your core position somewhere into the doji candle 503, somewhere above 5, if that's a core position. That core position has a chance, based on the monthly chart, that if it's able in April to even squeak to one penny above 576, that says to me that it's going to work its way higher into the May period. 580, 587 and higher would be the target, and 663 is the 200-period exponential moving average, long-term magnet line that it's really trying to get to. And that to me would be a long-term target, is at 663 200-period exponential moving average. You can see every time since it broke down from this 200-period moving average with the retest back in July of 1999, every time it's getting closer and closer, and the MACD is slowly moving higher. So my long-term aspect to this is keep it. I would hold some core position, but I would definitely have some kind of a tie stop on your second trading position. Now, A&R was asked about in the den. I'm just swinging my head around to see if there were any callers at 877-927-6648. Okay, quickly, A&R is a caller waiting. A&R is Alpha Natural Resources, Inc. Made an Eiffel Tower move in the monthly chart from the, oh my goodness, it was up at 119.30 back in July of 2008, plunged down to the 13, 14 area back in December of 08, ran up to a peak E at 68.05. That was in January of last year, and now it's plummeted back to the 13.80 ever. This is like an Eiffel Tower pattern. So the monthly is horrible. Weekly is trying to form a little base. The unbalanced volume says, yep, it's got a little bit of a bounce. If you are in this, I would make a stop. It's at $15.11. ANR. If it breaks under 14.53, I don't want any part of this, because that weekly will get even weaker. But let me tell you, if this thing manages to break into the $15.42 area, the wick, the upside down wick of that candle of the 2nd of April at 15.98 will become a target. That'll be the first time, and then you've got to expect a retest. It's been in a down mode so long that you've got to be prepared that this thing can do quite a bit of retesting. Now I'm going to go to our first caller. We've got Warren in Denver. Hi, Warren. How are you?
Good, Basil. It's nice here. So my stock is PAA, Plains All American Pipeline. It had a little accident in early March where it decided they're going to issue some shares. So it's bouncing off this 77 area bottom.
So wait. When they issued the shares, there was a decline, and now it's working its way sideways rather than up. Is that it?
Yeah, at that second bottom, that's when the actual shares came out.
Okay, great. Now it's so funny, because the weekly chart looks a lot. The monthly chart is completely different, but the weekly chart looks quite a bit like the one that I just spoke about a moment ago. Now, this is very interesting. I'm only going to put a plus on the peak D of the weekly chart, and I'll explain why. Stochastic pulled back sharply. There was an initial pullback in the daily and in the weekly, and the weekly went from a high of 84.48. Folks, the symbol is PAA, Plains All American Pipeline, and my guess is that this is not a tobacco company, but it is an oil something company, right?
It's like pure oil pipelines, almost no natural gas to the pipeline.
Okay, so that's a different kind of a pipe. 84.48 was the high the week of the 2nd of March. It's pulling back in one leg to 76.37 the week of the 16th. Then it tries to rally, and it turns the 9-period exponential moving average into a kind of a magnet line, but it keeps making slightly higher highs and not really slightly lower lows, which is kind of like a wedge formation. That's not important. What is important is I'm only putting a plus sign, and I will change that plus to a down arrow if this closes under $76, and it's at $78.14 right now. That's the weekly chart. Now the monthly chart. Oh, I must do this quickly. Give me 1 second. It doesn't take me long to do, and I always have to check to see if that was the lowest low bar. Yes. So here we go. That's peak A, peak B, peak C, peak D, peak. I'm going to treat this as an instant restart for the moment. A, B, and I'm going to say G/C to explain that it could be an instant restart. It could have been a peak G, and this could have been a brand new A. I'm calling it D for now. So there's nothing so far wrong. Let me explain to you. The pattern I'm looking at in the monthly chart, if you look at the MACD, the stochastic and the MACD of the monthly chart, this particular pattern says very often it's what I call the double camel hump. What happens is you make that arch formation, and then there's another arch formation, but it's much shorter, much shorter. In this pattern, very often what you get is a D or an E, or an E or a sudden F, or an F or a sudden G, and then it comes down very sharply. My suspicion is that based on the weekly chart, if PAA is able to climb into the 80.65 area, which for this stock should not be a big deal. The stock, it should not be a big deal from the way it's acted, right, going into the high with that beautiful rally from the 60s right up into the 84, 85 area. It should not be a big deal for this to climb to 80, what did I say it was? Somewhere around 80.60 area, 80.80. If it can do that, it tells me that the monthly has one more spike to the upside, and then you have to be very careful. Okay. Now let's go to the day. So are you in this?
No, because I was just kind of like waiting to see if it kind of rectangled sideways in the daily.
Okay, yep. Well, that's
that 77 areas.
So this is D. And a perfect peak E and a perfect peak F. That's at F top, and that's what you've got in the day. Okay. I'm so pleased we went to this. You know the pattern that I talk about, which is the ChapmanWave dreaded H. Looks just like a lowercase h that can turn into an M pattern. Right. That's exactly what the daily is doing. Now, What happens in the M pattern is you get one sudden slide that takes out the left side low, and it looks really ugly, and that would be 76.37. It doesn't have to do that, but if it does that, what should happen is it should 76.37. It should quickly bounce right back, and the next arch should be a much bigger one, and that would coincide with a potential rally back to the 84.48. Now, how do you trade this? That's something completely different. How would I trade this? Because I don't know what it usually does when it offers shares. I wish I had a little history on this, because the history of the stock is kind of what you want to be following. But I'll tell you what I would do. I would have one tiny position that's at 78.07. Man, I would just start with a few shares. And the reason being, I want to get a feel for how it's acting away from the stock market. In other words, if the stock market today closes only 45 points up in the Dow and 6 points up in the S&P, or worse than that, I want to see if this holds steady. If it holds steady, that to me says is buying. You know what? I'm going to think it through, and I'm going to come back with an answer how I would trade this, expecting one of two things. It's either going to be breaking down, and that it's going to tell you that really quickly by closing under 76 decisively, or it's just going to nudge into the 76s and then move very quickly higher. So let me think it through, and I'll be right back.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back, and we're on with Warren in Denver, looking at PAA as a symbol. Now, Warren, in my CD, introducing the ChapmanWave methodology, and you can see this is the cover here. There's a particular pattern I'll look at, which is called the dreaded H pattern. It looks just like a lowercase h, and this is what it looks like. You can see right here in the in Tiger TV. And what happens at a certain point, the H can turn into a continuous M formation. And that M formation is exactly what we're looking at here. If we're looking at the 120-minute chart, or if you're looking at your daily chart. So I'm going to make 2 recommendations to you. One is you could just have a little nibble of the stock right now and put in a stop of, it's a 78.65, put in a stop of 76.50, 2 points. I don't think it's a big deal in a very small position because it's a feeler position. That's one thing. The other is you can just say, I'm not doing anything. I want to see how it holds 76s. But if it starts to get to 78.90 or 79.10, 10, that's where I would definitely want to add a little nibble, because that's where the larger H pattern could start to unfold. So that's the way I would trade. And if you do it at a higher level, you actually have to have a much tighter stop, funnily enough. So I hope that helps you. And the reason why is because of that monthly has a chance, even though it's peak D, MACD is still strong, I think it has a chance to retest the highs and make a leg E. Then you've got to be careful. But we're so good at the game, maybe next week. Thanks so much thank you for calling.
Okay.
Thank you very much. Now, folks, this is what I want you to do. I had a question in the den if I would just cover the S&P in the larger context. Yes. The S&P in the larger context, unlike the Dow, has made, in fact, is probably making a peak C right now rather than a peak D. This is what I'm looking at. In the S&P, there's a pullback, but it isn't. Let me just go to the one that I showed in the beginning. If you're looking at what my subscribers get every day, this is the 120-minute chart on the left. This is the VIX index on the bottom on the left. This is the TRIN index on the right there. Here's the Dow. The Dow undercut the 12,734 low. That says it can bounce. It can actually have a pretty good bounce, and the bounce can even go to 12,929, 13,050. I'm not sure it can even get there. And the reason is that the S&P has not completed its move down to the 1340 level. So what I'm looking at here is this is the typical thing that you get in this ChapmanWave flat base restart. You get the arch formation with a bounce. That's number one. Number two is I'm going to just deviate for a second to say that the S&P has very strong resistance at 1387, and it's at 1368.74 right now. The stochastic is flat at 14%. It hasn't even started to turn around yet. I see more to the downside. I definitely see a retest of that 1348 to the 1337 area at some point in the next 3 to 4 sessions. It could even be by Friday. Now, if you're looking at the Qs, 1, 2, 3, this is very important as well. Why? Because Apple has been a formidable part of it. And the Qs are saying to me that they're starting to fail. And that there's a real good chance that by the 13th of, that's this Friday, we could see if the Qs close at the low and tomorrow they break 65.92 rather than retesting 67.13, that says that the Qs, and Apple is a big part of it, of course. It isn't the only thing, but it's a big part of it. I've got a peak E. Pretty sure today's going to be peak E in Apple, and yesterday it made a peak F top at 644.05, and I suspect that Apple has made a high for right now, and the only thing I would say is if you are short, 644.06 would be a stop for me. So I'm looking at the bearish side here. Even if I don't know the time frame, my suspicion is that we're going to be going down and doing a lot of retesting, and that's the way I'm looking at it, and I really hope it helps those of you that were looking. I'll be back Friday. I'll be back Friday from Brooklyn, where I'm babysitting. I'll be doing a Larry Pesavento babysitting feature from there. So I'll be back Friday, and thanks for being here. Stay tuned.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter.